Happy Friday, IHMC friends and family. It's Shayan with Integrity Home Mortgage, back with your weekly mortgage market commentary. This week was very light on data, but markets have the Fed squarely on their minds as they prepare to make their next rate announcement on Wednesday. We got no official commentary out of FOMC members as they are currently in their media blackout period, which starts 2 Saturdays prior to each Fed meeting. But it's clear that opinions on policy continue to differ among the members. There's no argument that inflation continues to run hot, or even that tariff impacts will provide additional inflationary pressures once they begin to come through the data, which will be soon. There isn't really even an argument of what the Fed's next move should be. Despite persistent inflation, no one's talking about potential rate hikes. It's pretty much a foregone conclusion that the next move, whenever it happens, will be to cut rates. There is, however, a difference of opinion on the timing of those rate cuts. Some officials favor a continuation of the wait-and-see approach, wait for more progress to be made towards the 2% inflation goal before making additional cuts. Others are advocating cutting rates sooner, like now, for example, pointing out that economic growth and labor markets are both slowing down, and the Fed is at risk of overshooting and potentially doing some harm to the economy. Nonetheless, markets are currently pricing in zero chance of a cut this time around, but are still expecting 2 cuts, that's 50 basis points in total by the end of the year. That view has been consistent for a couple of months now. Now remember, that doesn't mean that we should expect 50 basis point lower mortgage rates. Today's rates are in fact reflective of the expectation that those 2 rates will in fact happen. So all things being equal, 2 cuts should result in no substantive change to mortgage rates. If Fed officials come away from this meeting with the intent to fulfill market expectations and cut rates at 2 of the last 3 meetings of the year, we should expect Chair Powell to start hinting that during the press conference. Anything short of that may be perceived as hawkish and could push rates slightly higher. So what we're looking for this week is not the results of the announcement, but really the results of the press conference, because it won't be a change to policy this time around, but some jawboning could happen that would prepare the market for some policy adjustments next month. Next week is a really busy one for the economic calendar. We're going to get a very rare 1, 2, 3 punch with important data on inflation, including core PCE, jobs, including the unemployment rate and non-farm payrolls, and the Fed announcement. These are all potential sources of significantly increased volatility, so my recommendation is to lock early if at all possible. That's all I got for you this week. I hope you have a great weekend, and we'll see you next time.